Accredited Investor. What is that? Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale, and we're back with another installment of your favorite series, What is that? Where we discuss financial term and topics you may have heard, but we make them super easy to understand. If you've ever wondered what it means to be an accredited investor or how you can become one, tune in and let's get started right at the beginning. Accredited Investor. What is that? In the US, the definition of an accredited investor is set forth by the SEC in Rule 501 of Regulation D. An accredited investor is an individual or business entity that is allowed to trade certain securities that are not necessarily registered with authorities. They are entitled to this privilege by satisfying at least one requirement when it comes to income, net worth, asset size, or professional experience. Accredited investors can include a high net worth individual, a bank, an insurance company, a broker, and a trust. You see, unregistered securities come with an inherent risk because they're not necessarily required to file certain disclosures with the SEC. So only accredited investors are allowed to invest in them since they know the risks involved. So how can you become an accredited investor? Let's start with income. If your income is at least $200,000 or $300,000 for joint income in the last 2 years, and you expect to make the same or more in the current year, you can be considered to be an accredited investor. Unfortunately, you cannot satisfy this test just with the current year and an expectation of future years. There must be a history of at least 2 years. The other way to qualify as an accredited investor is by net worth. Your net worth needs to be at least $1 million or more, either by yourself or with your spouse. Net worth is calculated by taking all of the value of the assets you own, that's cash in the bank account, securities you currently own, real estate, etc., and then you minus that against your liabilities. This is your debt. It's very important to note that if you're using the net worth calculation, you cannot include the value of your primary home. The rules say that an accredited investor must have a $1 million net worth, not counting their primary home. The SEC also considers a person to be an accredited investor if you are a partner, director, or officer of the company that is issuing the unregistered securities. A business entity can be considered an accredited investor if the business has $5 million or more in assets, or if all of the owners are accredited investors themselves. Then, by definition, the business entity also becomes an accredited investor. There's actually no formal process to becoming an accredited investor. Using forms as proof, such as W-2s, tax returns, or statements of assets, this is how you determine whether or not you meet the right requirements. CPAs or attorneys or bankers can create letters in which certify that you are an accredited investor based on those documents. Again, the reason why it's so lucrative to be an accredited investor is that it gives you the opportunity to invest in certain securities in which are unregulated by the SEC. These securities have a lot of volatility or at risk of a large loss, and as a result, they only want sophisticated persons investing in them because they will need to fend for themselves. We hope you enjoyed this latest installment of What is that? Hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.